about 90 companies reporting this week, but a lot of them are retailers, and they're going to give us an interesting look into what's going on outside in the economy right now. So, which are the crucial retailers you should be watching this week? I brought five of them. Let's dive right in. So the first one out of the gate is Urban Outfitters, ticker URBN. And of course, they are Urban Outfitters, but they also own Free People and Anthropology. Now, they have a couple interesting segments that have been holding up well during the pandemic, and that's their home accessory and furniture side. Both Anthropology and Urban Outfitters have that. And Urban is used by a lot of college students to buy things for their dorm rooms, their apartments, that kind of thing. So that'll be interesting to see what kind of back to school jump that Urban is going to see. Also on the apparel side, obviously back to school, but maybe back to work. Some people buying a lot more apparel now, and including for special occasions like weddings, things like that. So this is going to be an interesting one to watch. Now, year to date, the shares are up 47%, but most came from the first couple of months, and now they've just been treading water. They have beat big 4 quarters in a row, so we'll see if they can keep up that momentum. But otherwise, they're not quite yet back to that 2018 5-year breakout there. So we'll see if they can get some momentum off of this report. Then we're going to switch over to one of the juggernauts of retail, Dick's Sporting Goods. Look at that chart, just 2 misses in the last 5 years. One of them was in 2020 at the start of the pandemic, but they've mostly put together, big beats here during the pandemic, except for that first quarter there of 2021 or fourth quarter of 2020 in their calendar. So they are rocking it here. Shares are up year to date 95%, but they're only trading at 12 times forward earnings because that E side has really just been soaring. Shares are busting out to new highs here going into the number. Nobody thinks that anything having to do with outdoor is going to slow down. Plus, remember, they too are going to have back to school, and it should be good. So Dick's Sporting Goods, this is one, any of the sporting goods outdoor type companies, these are the ones to watch this earnings season. Then we're going to switch it over to the beauty side, Ulta Beauty. I haven't talked about this one in quite some time. I own it in my own personal portfolio, and as you can see, it too is busting out to new highs here going into the number. Year to date, though, these shares are up only 27%. So still beating the S&P 500 year to date. But over the last 5 years, as you can see, it's had a bit of difficulty, even though it's beat most quarters, just those 3 misses in the last 5 years. Now, it has put together 2 big beats in a row, but this is one that also should be a beneficiary of the reopen, the back to school, all of that, back to colleges especially, because people will be investing in beauty again once those masks went off. Of course, the masks are somewhat going back on again, but they still should see a big boost here. So these shares trading at 29 times, though, not cheap like Dick's is. And they've got a new CEO, so this is something also to be watching. But the beauty side has been strong so far as we have this reopen. So we will see what happens with Ulta. Then we're going to switch it back over to more of the apparel side. Burlington Stores, BURL, has been one of the big winners over the last 5 years. Just those 2 misses, including one right when the pandemic started. And then they've managed to beat 4 quarters in a row once again. Year to date, the shares are up 32%, and over these last 5 years, up 338% versus the S&P 500 up just 103%. So triple the S&P 500, but Burlington Stores now trading with a forward P of 38. That's more expensive than Alphabet or Facebook. So you have to be asking, how much more is left in the tank here with Burlington? How expensive are the shares worth, and going, for investors to be paying for them here for these earnings? We will see. Then we're going to wrap it up with Gap. So the Gap isn't just the Gap, of course. It owns Banana Republic, Old Navy, and Athleta. Old Navy's been one of its hottest brands, and it's going to be a big beneficiary of back to school. So I'm going to be watching that. Athleta has been hot for several years. It's a bit of a smaller brand for them, but it's, competing against Lululemon and the other athleisure companies, still very, very popular and will be again on back to school. And then you have the other two that are struggling, Banana Republic, especially once there was no more back to work. But now that back to work might be here, is Banana going to rebound here into the holiday season? It'll be interesting to see what they say. So these shares are up 40% year to date, but off those highs, as you can see. Has put together 3 out of the 4 last quarters as big beats. So that's promising. But over the last 5 years, these shares are up just 7.4% versus, again, the S&P 500 up 103% during that time period. So the gap really was all about the timing. If you bought it on those lows last year sometime in 2020, then you're doing okay. But all the long-term shareholders, it hasn't been a fun ride. Shares are cheap, still trading around 15 times. So we'll see what is going on with all their brands this earnings season. But I am optimistic on both back to school and back to work. So as you can see, it's kind of a mix of retailers this week, but a lot of these are in prominent areas where the consumer has been spending. Is the consumer still spending? Watch the guidance on all these retailers this week. And as you know, there's more than just retailers going. We're going to have a lot of other hot tech names. Yes, once again, some tech names are reporting, and others must-see type of earnings charts. So you don't want to miss a single episode. Get them all at Zacks.com/YouTube. And I'll see you again next time with some more earnings charts.